Good morning, everyone. This is Bag of Don, StockMarketCaddy.com. It's February 17th at about 10:30 a.m. The futures markets are open, and not much of anything not much of anything is going on right now, and not much of anything is expected really today. And we'll get started again probably tonight and tomorrow. But I do want to show you basically where the what we are seeing and where we are at, and incredibly the S&P, they have reversed those short calls. The S&P, on when we last did a video, the daily was on a flat position. It has now gone long, and so these are the dynamic stops that need to be taken out, namely 1750, in order for the daily to get into a short position. So the bulls once again, incredible, have the upper hand on the daily, weekly, and monthly. We're not nowhere even close to being challenged, and the shorter time frames are continue to be long. We're going to show you what we're going to do in a moment, strategically from managing our monies. So our longer term monies on the weekly and the monthly, we're still long. The Russell very much the same. The daily though is still flat. We have this weekly potential reversal hint here, and even a monthly stall. So of the two markets, really of all the markets, the Russell is the weakest, and which is not to be ignored. It's where a lot of the small specs are. If you look at your commitment of traders report to, incredibly, the large specs, which is where those are the guys you want to follow. The large specs are net short a tremendous amount of shares, and the small specs, who you don't want to follow, they are net positive a large amount, and they have pulled them. This time last year, the small specs were short. Now they have pulled them to the other side. So we want to keep an eye on the Russell going forward here. So we haven't given up the ghost yet for a resumption of a correction. We just don't see it anytime real soon. The Nasdaq has been strong throughout all this. It was the strongest of them all, and the only thing that we see nothing actionable is some of these we call high divergences on the longer time frames, but nothing yet actionable for us. And then the Dow had also been weak, but has resumed, and the daily is still in a flat position. The weekly is in a flat position, and so she's still got some weakness. Now, how do we play this? Let me show you our trade manager. Now this is a view of our trade manager, and as we have mentioned, we trade multiple products, multiple time frames, and we have multiple accounts. The reason why we like to have multiple accounts because sometimes we will be both long and short the same product as a basically a hedging mechanism. On the monthly, we are long, and we continue to be long, and we've been long since, there it is, February 29th. The weekly also long, and those monies are very very secure right now. The 240, we did go long, and even the 60, and this was back on February 7th and February 14th. Now, what we don't like to be doing here on these shorter time frames, this is a good amount of money. Historically, these hourly time frames generally don't pay as much. This is kind of like the bird food. This is the hedging, where we like to do our hedging on the shorter time frames. So what we're going to do, since the daily actually is generating a long signal on the 14th, we're marginally up. We don't want to be on one side of the boat. So we're going to, here where the volumes are soft, we're going to go in here and we're going to pocket this money, which will be about $4,000. So we'll put that in our pocket. We'll be real time. We'll be flat on our hourly. Hopefully the long, we're just going to follow our system. If she stays long, then yeah, she stays long. If she goes to a flat position, we're just going to respect our signal. But as long as she stays long, and if we're long on the daily, weekly, and monthly, what we will do in the days ahead is we will only take short entries on the 60 and the 240. And you'd say, Don, why do you do that? Well, that's how we hedge ourselves. So that's how we're going to manage it from here. And let's come back to the radar. and we're just going to watch our this is our system, which is what we call the shark. It's always moving, it's always dynamic, it's either long, flat, or short, so it gives us ample opportunity. It's the same system working on all of the time frames. So it's consistent with each other. The stop levels are the first stop would produce a flat position. The second stop would produce a reversal. In this instance, a short. And then we have slope ratings and wind direction and fairway width. And then we have individual clubs that are meaningful to us in English that tells us what the many various charts are doing on many various time frames, and we can just come here and manage accordingly. So, I'm not going to give you the whys and wherefores of what's going on in the market. I guess there's enough of that out there. That's too much left brain stuff for us. This is our right brain. We try to keep it very mechanical, straightforward. So, we'll see what happens. Good luck and incredible, but the Bulls are in charge right now. We'll be watching day in and day out. Good luck.